Welcome to the deep dive. Today, we're kind of, going beyond that whole start a corporation thing. We're like getting into what it really takes to run one.
Right, like the stuff they don't tell you in those get-rich-quick schemes.
Exactly. And our guide for this deep dive excerpts from Run Your Own Corporation. It's by Garrett Sutton.
He's like the go-to guy for this stuff. His book's kind of like a secret playbook.
Ooh, a secret playbook. I like the sound of that. What kind of secrets are we talking about?
The strategies that the wealthy use to protect their assets and really make their corporations thrive.
So the stuff they don't teach you in business school. Okay, I'm all in.
Yep.
What's the first rule of this secret playbook?
Maintaining your corporate veil. That's kind of the legal barrier between you personally and your company.
Okay, I've heard that term before, but honestly, I'm still a bit fuzzy on what it actually means.
It's really important. Think of it like this. Your corporation is a shield,
Yeah.
right? Protecting you from liability.
So if my business gets sued or something.
Exactly. If you keep that veil strong, they can't come after your personal stuff. Your house, your car, savings.
That's a relief. I definitely don't want to lose my house because of a business lawsuit.
Nobody does. But here's the thing. A lot of people accidentally tear down that veil without even realizing it.
Wait, accidentally? How do you do that?
By not following the proper procedures,
Hmm.
mixing personal and business finances, or just, not treating your corporation like a separate entity.
Okay, so it sounds like there are a lot of potential pitfalls. I'm already feeling a little nervous.
Don't worry, Sutton lays out clear steps to avoid those pitfalls.
Yeah.
And, he uses stories to illustrate these points, which makes it way more engaging.
Stories. I love stories. Who are the characters in this corporate drama?
Well, there are these three entrepreneurial couples, Tom and Nancy. They're engineers. Then there's Alana and Sherry opening up a salon. And then there's Bogo and Morton. They breed whippets.
Whippets. Okay, that's a new one. I'm definitely intrigued by those guys. But before we get too deep into their stories, let's back up a bit. The book talks about choosing the right entity, but honestly, those terms, LLCs, S Corp, C Corp, they all kind of sound the same to me.
Yeah, it can be a bit of a, alphabet soup. But Sutton breaks it all down, from sole proprietorships to partnerships to the different types of corporations.
And what's the key takeaway there? Like, how do you know which one's right for you?
It depends on your specific business goals, your risk tolerance, and your tax situation. But one thing Sutton emphasizes is avoiding what he calls bad entities.
Mad entities. What makes them so bad?
They offer very little protection for your personal assets. For example, if you operate under your own name as a sole proprietor, you and your business are legally one and the same.
So if my business gets sued.
They can come after your personal assets to cover the damages. Your house, your car, everything's on the line.
Ouch. That makes the benefits of incorporating crystal clear. But with so many options, how do you even begin to choose the right entity?
It's really important to consult with, a qualified attorney and accountant. They can help you weigh the pros and cons and make the most strategic decision.
So it's not a DIY project. You really need expert guidance.
Exactly. Now let's dive into some of those stories and see how these couples navigated this whole entity selection process.
Perfect. Let's start with Tom and Nancy, the engineers. What entity did they end up choosing?
Well, their story actually highlights why those bad entities can be so dangerous. They were working for this guy who ran a rock quarry as a sole proprietorship.
A rock quarry. Sounds kind of risky.
It was. And when there was an accident, he lost everything. His house, his savings, everything, because he didn't have the protection of a corporation.
That's a cautionary tale for sure. So Tom and Nancy wisely, they went a different route, right?
They did. They chose an S Corp, which offers pass-through taxation and some liability protection.
Pass-through taxation, what does that mean in plain English?
Basically, it means that the business's profits and losses are passed through to the owner's personal tax returns. So you avoid that double taxation that can happen with C Corp.
Okay, that makes sense. So what about Alana and Sherry, our salon-owning duo? Did they also go the S Corp route?
They actually chose an LLC, and they decided to form it in Nevada.
Nevada. Why Nevada?
Nevada has some pretty attractive benefits for LLCs, including strong liability protection and the potential to minimize payroll taxes.
Interesting. So even the state where you incorporate matters.
Absolutely. Different states have different laws and regulations governing corporations and LLCs, so you really need to do your research and choose a state that aligns with your business goals.
This is getting complicated. Okay, what about our whippet breeders, Bobo and Morton? What did they end up choosing?
They went with the C Corp, which is often the structure for larger companies or those planning to go public. They were working with a lawyer who advised them on this, and it aligned with their long-term vision for their whippet breeding empire.
So it sounds like there's no one-size-fits-all answer when it comes to choosing an entity. You really need to consider your unique situation and get expert advice.
Exactly. Now let's move on to a document that's crucial for any business with multiple owners, especially if they have a 50-50 split like Alana and Sherry, the buy-sell agreement.
Okay, buy-sell agreement. Admittedly, they sound a bit, a bit dry. Why are they so important?
Think of it as like a prenup for your business. It spells out what happens if one owner wants out: death, disability, divorce, even a big disagreement.
So it's like a roadmap for handling those difficult situations.
Exactly. And without one, you could be stuck in business with someone you no longer want to work with, or worse, their spouse or heirs.
Oh, I definitely wouldn't want that. But is a buy-sell agreement really necessary when you're just starting out and everyone's getting along?
That's actually the best time to create one. When relationships are good, it's easier to have those open and honest conversations about, about what could happen down the road. Plus, it shows investors and lenders that you're thinking strategically.
So it's about being proactive and protecting yourself from potential problems.
Exactly. And Alana and Sherry actually resisted creating a buy-sell agreement at first.
Really? Why?
They thought it was, kind of a negative thing to think about. But their lawyer, he really stressed the importance. He said, imagine if Alana got divorced. You wouldn't want her ex-husband suddenly becoming a partner in the salon, would you?
That's a pretty compelling argument. I can see why they changed their minds.
Right. It's about protecting your interests and ensuring the long-term stability of your business.
So we've chosen our entity and created our buy-sell agreement. What's next? What are the day one essentials for actually running a corporation?
Well, one of the first things you need to do is get an EIN. That's an employer identification number. It's basically like a social security number for your business.
Right. I remember hearing about EINs, but never really understood why they were so important.
It's all about, solidifying your business as a separate entity in the eyes of the IRS. Without one, you're essentially operating as an extension of yourself.
Which defeats the whole purpose of incorporating.
Exactly. And getting EIN is super easy. You can apply online, and it usually only takes a few minutes.
Well, that's a relief. What else do we need to tackle on day one?
Setting up your bookkeeping system is crucial. You need to track your income and expenses carefully and make sure you're categorizing everything correctly.
Bookkeeping, everyone's favorite task. But I know it's important. Any tips for making it less painful?
There are some great software programs out there that can really streamline the process. But even with software, it's important to understand the basics of accounting.
So maybe invest in some good software and maybe even work with a professional bookkeeper.
Definitely a good idea. Accurate and organized records are absolutely essential, especially if you ever get audited.
So we've got our EIN, our bookkeeping system set up. What else do we need to consider in these early stages of running our corporation?
That's where we'll pick things up in part 2 of our deep dive. We'll explore the ins and outs of leasing commercial space, building your brand, and navigating the complexities of marketing and client retention.
Sounds like a plan. Stay tuned for more insights from Run Your Own Corporation. We'll be back soon, ready to equip you with the knowledge and strategies you need to make your corporation a success.
Okay, so we're back. More corporate secrets from Garrett Sutton. Last time we were getting those basic building blocks in place, EINs, bookkeeping, making sure we're not going to lose our houses if things go south.
Right. The groundwork's got to be solid before we build the business empire.
Empire building. I like it. But before we get too carried away with empires, let's talk about something a bit more, practical. Leasing commercial space. Yeah, that can be a minefield. You think you found the perfect spot, and then bam, you're stuck with a lease that's going to bleed you dry.
Ouch. I definitely don't want that. Sutton's got some advice on this, right?
He does. He uses Alana and Sherry, our salon owners, to illustrate this. Remember them.
Of course. They were going to call it Salon Alana, but ran into some trademark trouble. What happened with their lease?
Well, they were ready to sign this lease, all excited about their dream location. But Alana's dad, Big Jim.
Big Jim, always the voice of reason.
Yeah. He was like, hold on a second. Let's take a closer look at this thing.
Smart move. What did he find?
Well, first, the lease term was way too long. They would have been locked in for like 5 years.
5 years, that's a long time to be stuck with a bad lease.
Exactly. And then there was this personal guarantee clause.
Oh, what now?
It meant that if the salon went under, Alana and Sherry would be personally responsible for the remaining rent. They could lost their houses.
No way. That's crazy. So what did Big Jim do?
He negotiated like a pro,
Mm.
got the lease term down to something more reasonable, limited the personal guarantee, and even clarified who was responsible for what in terms of, maintenance and repairs.
Big Jim's a hero. What else does Sutton say about these tricky lease agreements?
He stresses the importance of understanding those common clauses.
Yeah.
Like the option to renew, the right of first refusal, all that stuff.
Yeah, it's easy to get lost in all that legal jargon.
Right. That's why he emphasizes getting an attorney to look it over, before you sign anything.
Always good advice. Okay, so we've secured our space, hopefully with a lease that's not going to bankrupt us. Now, how do we make this corporation, stand out from the crowd? We need a brand.
Yeah, branding's crucial, but Sutton says it's more than just a logo or a catchy slogan. It's got to be deeper than that.
Okay, so what is it then? What makes a brand really effective?
It's about like the essence of your company, the values you represent, the promise you're making to your customers.
So it's about like the emotional connection you create.
Exactly. And he says, got to think about your target audience, figure out what makes you unique, what problem you're solving for them.
It's like finding your niche, your tribe, whatever you want to call it. But then how do you actually, translate that into a brand?
He starts with the basics.
Yeah.
A good domain name, a trademark search, make sure nobody else is already using your brilliant idea.
Right. Like Alana and Sherry with Alana. Someone else was already using that name.
Yep. They got a cease and desist letter. It was a mess.
So trademark searches are crucial.
Absolutely.
Yeah.
And then there's the logo, the visual representation of your brand.
Yeah, that's important. You got to make a good first impression.
Right. It's got to be memorable, eye-catching, but also, professional.
Okay, so we've got the brand in place. Now, how do we get the word out? We need a marketing strategy.
Sutton's all about a targeted approach. No more spraying your message everywhere, hoping something sticks.
So no more throwing spaghetti at the wall.
Exactly. He says, you got to understand your customers, their needs, their pain points.
It's like speaking their language, connecting with them on a personal level.
Right. And networking's super important too. Attending events, joining industry groups, getting your name out there.
I'm more of an introvert, though. Networking can be kind of scary.
I hear you. But Sutton says it's not about, being the loudest person in the room. It's about building genuine connections.
So quality over quantity.
Exactly. And then, of course, there's your sales pitch.
Yeah.
That concise, compelling explanation of what you do and why people should care.
The elevator pitch.
Yeah. Sutton says practice it, refine it, make it, second nature.
Okay, so we've got networking. We've got our pitch down pat. What about advertising?
He recommends targeted advertising, but, got to be strategic about it. Choose the right platforms, the right channels, so you're reaching the people who are actually interested in what you offer.
So no more throwing money at random billboards hoping for the best. Okay, so we're attracting new customers. That's great. But what about the ones we already have? How do we keep them coming back?
Client retention. That's often more cost-effective than constantly chasing new leads.
It's like the 80-20 rule, right? 80% of your business comes from 20% of your customers.
Something like that. And Sutton gives some really practical tips for building loyalty. Exceeding expectations, providing amazing service, showing appreciation.
Like sending those handwritten thank you notes. People love that personal touch.
Right. And he talks about offering gifts or even making donations to clients' favorite charities.
So it's about going above and beyond, making them feel valued.
Exactly. And remember, our three couples, they all had their own unique ways of showing appreciation. Tom and Nancy focused on building those long-term relationships within their industry, while Alana and Sherry had a customer rewards program.
And Bobo and Morton, our whippet breeders, they donated to charities their clients supported. That's awesome.
It is. It shows they're paying attention, that they really care.
Okay, so we've covered a lot of ground here. Leasing, branding, marketing, keeping those clients happy. But now, let's talk about the T word, taxes.
Yeah, we can't avoid them, but Sutton says, understanding taxes can actually be an advantage.
An advantage? How so?
Well, for starters, choosing the right entity structure can have a huge impact on your tax liability. And then there's, payroll taxes.
Mm-hmm.
especially with Social Security.
Mhm.
Who knows what's going to happen with that?
Don't even get me started on Social Security, but what's the main takeaway for business owners when it comes to payroll taxes?
Sudden stress is minimizing your liability legally. Working within the tax code to make sure you're not paying more than you have to.
So it's about being smart and proactive, not just hoping for the best come tax time.
Exactly. Now let's talk about another big decision for business owners, hiring. Do you bring on employees or do you work with independent contractors?
That's a tough one. What factors should we consider when making that choice?
Sutton breaks down the pros and cons of each option, but he also warns about misclassifying workers.
Misclassifying, what does that mean?
It's when you treat someone like an independent contractor. They set their own hours, use their own tools, but legally, they should be classified as an employee. And the IRS has some pretty strict rules about this.
So it's not just about what you call someone, it's about the actual nature of their relationship with your company.
Right. And getting it wrong can lead to some hefty penalties.
Yikes. Okay, so we need to be really careful about that. What about employment agreements? Any tips there?
Sutton talks about the differences between regular employees and key employees. Those key employees are often essential to the success of the company.
Right, they're the ones who are like irreplaceable.
Yeah. And he highlights some clauses to consider for your employment agreements, assignability, confidentiality, non-competition.
Okay, let's break those down. Assignability, what's that all about?
It basically means that if your company gets sold or merges, those employment agreements can transfer to the new entity.
So your key employees can't just jump ship, leaving the new owner hanging.
Exactly. It's about ensuring continuity.
Okay, what about confidentiality?
That's about protecting your trade secrets, your sensitive information, making sure employees can't just go blabbing to the competition.
Makes sense. And non-competition agreements.
Those prevent employees from, going to work for a competitor or starting their own competing business for a certain period after they leave.
So they can't just steal your clients or use your insider knowledge against you?
Right. But, these agreements can be tricky to enforce, so you definitely need to consult with an attorney to make sure they're, legally sound.
Good point. Okay, so beyond employment agreements, what about all those other employment laws out there? Seems like there's a new one every day.
There are a lot.
Yeah.
But Sutton highlights some key ones. The Fair Labor Standards Act, Workers' Compensation Laws, and the Employee Polygraph Protection Act.
Okay, let's start with the FLSA. What's that all about?
It sets those, federal standards for minimum wage, overtime pay, record keeping, all that stuff.
The basics of employee rights.
Right. And it applies to most businesses, so you got to make sure you're in compliance.
Okay, what about workers' compensation?
That protects employees if they get injured on the job, provides medical benefits, wage replacement.
So if someone slips and falls while stocking shelves, that's covered.
Most likely, yes. But these laws vary from state to state, so got to do your homework there.
And what about that Polygraph Protection Act? What's that all about?
It basically says that, you can't use lie detector tests to screen employees or job applicants.
So no more dramatic lie detector moments.
Pretty much. There are a few exceptions, but for the most part, those are gone.
Good riddance, I say. Okay, so we've covered the legal stuff. Now what about the fun stuff? Employee benefits.
Oh, yes. Sutton talks about, both traditional benefits like health insurance and retirement plans and equity benefits like stock options.
So it's about finding that balance between, attracting and retaining talent while also being mindful of your budget.
Exactly. And he even gets into some pretty complex stuff like self-directed IRAs.
Those are the ones where you can invest in like real estate or gold, right?
Yeah. But Sutton stresses the importance of understanding those prohibited transactions. The things the IRS says you absolutely cannot do with a self-directed IRA.
Prohibited transactions. That sounds a little scary. What are some examples?
Well, you can't use your IRA funds for personal use, like, buying a vacation home or paying off personal debts. And you can't conduct transactions with what they call disqualified persons, like family members.
So it's all about keeping those IRA funds separate and using them strictly for retirement.
Right. And if you're considering a self-directed IRA, definitely work with a professional who knows the rules.
Good advice. Okay, so we've tackled legal compliance, employee management, all that fun stuff. What about the financial side of running a corporation?
Well, Sutton starts with a topic that's near and dear to the hearts of many entrepreneurs: home office deductions.
Ah, yes. If I'm working for my kitchen table, I want to make sure I'm getting every deduction I deserve.
Right. But Sutton emphasizes that the IRS has some specific criteria for what qualifies as a legitimate home office.
Okay, so what are those criteria? Like, does my kitchen table actually count?
It might. Sutton explains that you need to have a dedicated space that's used exclusively and regularly for business. And he explains the two different methods you can use to calculate the deduction.
So you can choose the method that gives you the biggest tax break.
Exactly. But you got to make sure you're meeting those IRS requirements.
Always got to be mindful of the IRS. What other tips does Sutton offer for those of us working from home?
He reminds us to check those zoning regulations, make sure you're allowed to run a business from your home, and to think about those potential distractions.
Distractions, like the dog barking during a conference call.
Exactly. And of course, make sure you have adequate insurance coverage for your home office.
Right. You don't want your homeowner's insurance to deny a claim because you didn't disclose that you're running a business from your living room. Okay, so we've covered the home office. What about contracts? What wisdom does Sutton impart in that arena?
He's a big advocate for, written contracts. Even if you're dealing with friends or family, get it in writing.
Right, because, as they say, verbal agreements are worth the paper they're printed on, or something like that.
Exactly. Sutton says written contracts just provide that, that clarity, that peace of mind.
They're like a roadmap for both parties, outlining everyone's rights and responsibilities.
Yeah, exactly. And he points out some key clauses to pay attention to, like the scope of work, payment terms, those kinds of things.
And indemnification clauses, right?
Yeah.
Those always sound a bit intimidating.
They can be, but essentially it's about allocating risk, like who's responsible if something goes wrong.
Okay, so it's about protecting yourself from potential liabilities.
Right. And of course, always get an attorney to review any contract before you sign on the dotted line.
Sound advice. What about extending credit to customers? Is that something we should be doing?
It can be a good way to, boost sales, but it's also risky. Sutton explains the whole process of extending credit, doing those credit checks, getting personal guarantees if necessary.
Personal guarantees. So, like, if the customer doesn't pay...
You can go after their personal assets to recoup your losses.
Okay, so it's about protecting yourself.
Right. And Sutton also talks about security agreements and those UCC-1 financing statements.
UCC1s, I've heard those terms thrown around, but honestly, they kind of sound like a foreign language to me.
They can be a bit confusing. But basically, a security agreement gives you a legal claim to a customer's assets, like their inventory, if they don't pay their debts. And the UCC-1 is a public notice of that security interest.
So it's like putting a lien on their stuff.
Kind of. It's a way to protect your interest.
Okay, so we're extending credit, but we're doing it strategically and protecting ourselves. What about trademarks? We talked about that a bit earlier with Alana and Sherry's salon naming debacle.
Right. Trademarks are those distinctive symbols or words that, identify your brand.
Mm-hmm.
Sutton says choosing a strong trademark and protecting it legally is crucial.
So it's not just about coming up with a clever name, it's about understanding the legal side of things.
Exactly. And he breaks down the different types of trademarks. Fanciful, suggestive, descriptive, generic.
Whoa, slow down there. What's the difference between all those?
Well, a fanciful trademark is like a made-up word, like Exxon or Kodak.
Okay, so it's a word that doesn't exist anywhere else except for your brand.
Right. A suggestive trademark hints at the product, but it doesn't directly describe it, like Greyhound for bus transportation.
Okay, I get it. What about descriptive trademarks?
Those just describe the product, like American Bank for a banking service. And generic terms, well, they're just, common words that describe a category of goods, like computer or shoes.
Okay, I see. So you want to aim for those fanciful or suggestive trademarks?
They're usually the strongest, yeah. And Sutton also explains that whole concept of likelihood of confusion. Your trademark can't be too similar to an existing one.
Right. We learned that the hard way with Salon Alana. So how do we protect our trademarks?
He walks us through the process of conducting a trademark search, making sure nobody else is already using your chosen name or logo. And then there's registering your trademark with the USPTO, the United States Patents and Trademark Office.
So it's like officially claiming your brand.
Exactly. It gives you, nationwide rights and makes it easier to enforce your trademark if someone tries to infringe on it.
Okay, trademarks, check. What about insurance? That's another one of those essential evils, right?
It is. But Sutton emphasizes that insurance is crucial for managing risk, protecting you from those unexpected disasters.
Like what kind of disasters?
Well, there's general liability insurance, product liability if you're manufacturing things, professional liability if you're providing services.
So, like, if I accidentally give someone bad legal advice, my professional liability insurance will cover me.
Hopefully. But, there's also property insurance, business interruption insurance.
Business interruption insurance, what's that?
It covers you if something happens that forces you to close your business for a period of time, you know, like a fire or a natural disaster.
Okay, so it helps you stay afloat financially during those tough times.
Exactly. And Sutton says it's really important to work with a qualified insurance broker, someone who can assess your specific needs and find the right coverage for you.
It's like finding a good doctor. You need someone you can trust who understands your individual situation.
Right, someone who's going to be there for you when things get rough.
Okay, so we've covered a lot of ground in this part of our deep dive. Leasing, branding, marketing, taxes, hiring, contracts, trademarks, insurance. It's starting to feel like a real corporation pro.
You're getting there, but we're not done yet. In the final part of our deep dive, we'll talk about those crucial corporate formalities, how to handle government investigations and audits, and we'll wrap things up with some insights into succession planning and exit strategies.
Stay tuned for more wisdom from Garrett Sutton and Run Your Own Corporation. We'll be back soon to help you navigate the final frontier of, corporate domination.
Welcome back to the deep dive. We're in the home stretch now, wrapping up our exploration of Run Your Own Corporation with Garrett Sutton. We've talked about the excitement of starting up, building a brand, marketing, the ins and outs of taxes and hiring, all that good stuff.
It's been quite a journey, but now we're shifting gears, focusing on those aspects that are often overlooked, but absolutely crucial for the long-term success and protection of your corporation.
Okay, like what are we talking about here?
Yeah.
We're diving into the world of corporate formalities. Those procedures and practices that might seem a bit tedious, maybe even a little unnecessary when you're just starting out.
Like paperwork and meetings, not exactly the most glamorous part of running a business.
Right, exactly. But here's the thing. These formalities are actually essential for maintaining that all-important corporate veil.
No, okay, that corporate veil, it's like a recurring theme in our deep dive, and for good reason, right?
Absolutely. Remember, it's that legal barrier that shields your personal assets from business liabilities. If that veil is pierced, you could be held personally responsible for your corporation's debts or legal troubles.
And nobody wants that. So what are some of these key formalities that we need to pay attention to?
Sutton really emphasizes the importance of holding annual meetings for both corporations and LLCs. And these aren't just casual get-togethers, they serve very specific legal purposes.
Okay, like what? What actually happens at these annual meetings?
Well, it's a time to elect directors. Review your financial performance and make those key decisions about the direction of your company.
So even if I'm a solopreneur running my own little one-person LLC, I still need to hold these formal meetings and document what was discussed.
You got it. Think of it as creating a paper trail, demonstrating to the world, and more importantly to the IRS, that your corporation is operating as a legitimate, separate legal entity.
Okay, I'm getting it. It's about proving that you're taking your corporation seriously, even if you're the only one involved.
Exactly. If you don't follow these formalities, you could weaken your corporate veil, and that's a risk you definitely don't want to take.
Noted. So where do we keep all this documentation? I'm envisioning a mountain of paperwork here.
Sutton recommends a good old-fashioned corporate record book. Keep all your meeting minutes, articles of incorporation, bylaws, all that crucial stuff, organized in one place.
A corporate record book. It sounds almost medieval, like something you'd find in a castle vault.
Well, maybe not quite that dramatic, but it's about having those ducks in a row, legally speaking.
Got it. So, annual meetings, corporate record books. What other formalities do we need to be aware of?
Sutton also talks about special shareholder meetings. These are called when there's a significant decision to be made that, requires input from all the stakeholders.
So if I'm thinking about selling my company or merging with another business, that would warrant a special meeting.
Exactly. It's a way to formally address those specific issues and ensure that everyone is on the same page.
Okay, makes sense. Now let's talk about another fun topic, taxes. We know they're unavoidable, but what are some of those key deadlines that we need to keep in mind as corporation owners?
Right. We can't escape the tax man. Sutton reminds us about those quarterly payroll tax payments using Form 941 and that annual federal unemployment tax return, Form 940, which is due on January 31st.
Oh, yeah, those lovely forms. And don't forget those W-2s and 1099s for employees and contractors. It's a lot to keep track of.
It is. That's why having a good accountant on your team is absolutely essential.
Okay, speaking of things that can keep you up at night, what about government investigations and audits? Is there anything we can do to, prepare for those? Or better yet, avoid them altogether?
Sutton acknowledges that businesses, especially those involving self-employed folks, tend to get audited more frequently. But he offers some really practical advice for navigating those situations if they do happen.
Okay, so let's say I get that dreaded audit notice. What's the first rule of thumb?
Don't freak out. Easier said than done, I know, but remember,
Yeah.
you have rights. Sutton actually advises against meeting the auditor at your business premises.
Really? Why is that? Is it really that important where you meet?
It's about controlling the environment and limiting the information the auditor has access to. Plus, meeting on neutral ground can help you feel more confident, less intimidated.
Interesting. So it's a bit of a psychological strategy, too. What else does Sutton recommend?
Always have your accountant there with you during the audit. They understand the intricacies of the tax code, and they can advocate for you effectively.
So they're like a translator and a bodyguard all rolled into one. Essential.
Exactly. And while the general statute of limitations for an IRS audit is 3 years from when you filed your return, there are exceptions.
Like what?
Well, if you didn't file a return, or if the IRS suspects fraud, there's no time limit.
Okay, I'm definitely filing my returns on time and keeping those records squeaky clean.
That's the best approach for sure. Sutton also mentions that the IRS generally aims to wrap up audits within 28 months. But it's not a hard and fast rule.
Okay, well, that's somewhat reassuring. Now let's talk about protecting our personal assets, which is something we've touched on throughout this deep dive. But it's worth emphasizing again, right?
Absolutely. Sutton reiterates the importance of maintaining that corporate veil. That means keeping your personal and business finances totally separate, not dipping into corporate funds for personal expenses, and documenting everything meticulously.
Right, treat your corporation like a separate entity, even if you're the only one involved.
You got it. He uses a great example. Bobo and Morton, our whippet breeding duo, remember? They got sued when some valuable artwork went missing from a property they managed.
Oh, yeah, I remember that. So what happened? Did they lose their shirts?
Nope. They were operating through their corporation, so their personal assets were protected.
That's a relief. So the lawsuit could only target the assets of the corporation, not their personal bank accounts or property.
Exactly. That's the power of the corporate veil, my friend. A real-life example of how it can shield you from personal liability.
Okay, I'm definitely a believer in the corporate veil now. But let's shift gears and look ahead a bit. What about succession planning and exit strategies? Planning for the future of our corporations, even if that future is years down the road.
That's a smart move.
Okay.
Sutton encourages entrepreneurs to think long-term, even in the early stages. It's about having a plan in place, whether you decide to retire, sell the business, or, something unexpected happens.
So, even if I'm nowhere near exiting my business, it's still important to have a strategy. What are some of the key exit strategies that Sutton discusses?
Well, they're selling the business outright, either to a third party, an employee, or even a competitor. He also talks about merging with another company, closing the business down, or passing it on to heirs.
Each of those options has its own pros and cons. What factors should we consider when choosing an exit strategy?
It depends on your goals, really. What's important to you? Maximizing your financial return, ensuring the legacy of the business.
Or maybe it's about taking care of your employees, making sure they're taken care of.
Right. And Sutton also talks about the importance of having your financial ducks in a row, especially if you're planning to sell. Buyers want to see a clean, transparent financial history, so good bookkeeping is crucial.
Makes sense. And of course, there are always tax implications to consider.
Always. Working with a tax professional is essential for structuring the sale in the most advantageous way.
Right. So selling to a third party is one option. But what about passing a business on to heirs? That seems like a whole other level of complexity, especially if it's a business you've built from scratch.
It is. And Sutton cautions against assuming your heirs want to take over the family business. He suggests having open and honest conversations, early on, to gauge their interest.
Right. It's not fair to just assume they'll want to follow in your footsteps.
Exactly. And even if they are interested, they might not have the experience to run the business effectively right away.
So what do you do in that situation?
Sutton recommends creating a transition plan. Maybe they start working in the business, gradually taking on more responsibility as they learn the ropes.
It's like an apprenticeship, grooming them for leadership.
Right. And mentorship programs or bringing in outside advisors can be super helpful too.
Okay, so we've got those exit strategies mapped out, but what about those of us who are in it for the long haul? What insights does Sutton offer for leading our corporations effectively over the long term?
He reminds us that directors and officers, they have a fiduciary duty to the company and its shareholders. They need to make decisions that are ethical, responsible, in the best interest of everyone involved.
So it's about being a steward of the company, not just someone who's calling the shots.
Exactly. And he talks about indemnification, that legal mechanism that can protect directors and officers from personal liability.
So even if a decision doesn't work out as planned, as long as it was made in good faith, they're protected.
Right. And Sutton also emphasizes doing your due diligence when appointing these directors and officers, background checks, conflict of interest reviews, all that good stuff.
Right. It's about building a strong leadership team that you can trust to guide the company in the right direction.
Exactly. And as we wrap up our deep dive into Run Your Own Corporation, Sutton leaves us with this emphasis on document retention.
Okay, we've talked about the importance of keeping good records, but what's the big deal with document retention?
Well, it's about knowing what to keep, how long to keep it, and understanding that there are legal consequences if you destroy documents improperly.
We've touched on that whole spoliation of evidence thing, right?
Exactly. If you even think there's a chance of a lawsuit down the road, you got to preserve all relevant documents. Talk to your legal team. Make sure you're on the right side of the law.
Okay, so document retention, it's not just about being organized, it's about protecting yourself legally.
Absolutely. And Sutton even goes beyond the legal and operational stuff, talking about the qualities that drive real business success.
Okay, I'm intrigued. What are those intangible traits that set successful entrepreneurs apart?
He talks about integrity, enthusiasm, planning and vision, delegation and belief.
Okay, those all sound important, but how do they actually translate into business success?
Well, integrity builds trust, which is essential for any relationship. Enthusiasm is contagious and creates a positive environment. Planning and vision provide that roadmap for the future. Delegation empowers your team, and belief, that unwavering conviction in your vision, fuels perseverance.
Wow, when you put it that way, it's clear that these qualities are the foundation of any successful business, really.
Exactly. It's about leadership, about inspiring others, about creating something that's bigger than just, profits and losses.
That's a great way to wrap up our deep dive into Run Your Own Corporation. So for our listeners out there, what's the one thing from all this that has really resonated with you?
What action will you take today to strengthen your company, safeguard its future, and make it a force to be reckoned with?
Thanks for joining us on the deep dive. We'll be back soon with another fascinating exploration, ready to equip you with the knowledge and insights you need to navigate the ever-evolving world of business.